Hello and welcome to this week's weekly Inner Circle Masterminds update. I'm just going to go through some of the major charts and the levels for the coming week. I'm going to start off with the Dow, which is a current short position from the breakdown from the week before. And what we need to know is what is the weekly range relativity level. We won't know it on the Dow till it actually opens this afternoon. We'll update that in the channel under the normal means. But just to give people an idea of what the level is going to be, I've just called up the futures and it's at 21,796, so about 130 higher than where we are currently. And so the Dow Jones level will be in that sort of price point. So where the close was, looking around 130 higher. If we do the E-mini, then we've got 2440 is the bullish level above. Below 2415, there's some decent support which is not there on the Dow and the Nasdaq, a little bit lower down on the E-mini, around 2402 to 2395. And on the Nasdaq, we had a counter-trend rally early in the week that then collapsed. You can see that the low last week was pretty much spot on that weekly lower level. And so for this week, we've got 58.47 above and 57.43 below. And remember that on the Dow and the Nasdaq, nearest supports are still very distant. Now returning just to the normal peak energy and peak expansion levels with all the various bits of code that we use. We've been in what we call a slingshot move on the Dow for quite a while. What we mean by that is it's become overextended on a range relativity basis. So then we were looking for that reversal, which we got. There was another raft of sell signals on Thursday. You can see we've got that UFO, that blue arrow that was at the top, which was our first warning sign, as it were. And then we got a whole huge number of sells there. That includes stepping processes, slam dunks, and RSI divergence. Really just pointing out how distant the nearest major support is. So 21,197. So looking at 450 lower before that major level comes in. If we do the Nasdaq, there's a minor daily level, a little bit lower down, but the weekly is the key level here. You can see that it's projecting forward and it's going to rise. Now that level will stay there or become permanent if we do not break 57.61. If we trade just one tick below it, that black line is going to come back down here and that's going to open up space. So if we do make new lows on the week, this will return down here and have a support level a lot lower. On the E-mini, a different picture really. We had the slingshot move, counter-trend rally that then had a couple of dojis, which is about the only candlestick pattern I actually like. But you can see this zone of support. There's two weekly black lines, so 2402 to 23.95 1/4. So that's your reference point for everything else US based, because that's the only one that's got any support that's near. Do a quick flick through on Europe. Nasdaq is trapped, DAX is trapped, but again, what was weekly resistance, where it topped out perfectly during the week, I think it stopped a couple of ticks below it, having previously held the support. We're trapped in this range, so there are your references. Don't really mind which way it goes. Just do Euro stocks. Pretty quiet. No major levels. By that I mean black or blue lines have moved above price. It's just drifting lower. Not that interesting really. If we do the FTSE, similar sort of scenario, really just ambling sideways. Again, no black weekly or blue monthlies have moved to the top, so all those red and pink lines are simply dailies, which are only used as a reference point. If we actually have a position, then we would use them as supports and resistances. We're not too interested in them at the moment though, because there is no position. Bonds have been interesting this week. Normally something that gets put on last, a little bit like West Ham on Match of the Day, for the 0-0 or the 4-0 or whatever. What it did do though was top out at this weekly level, 156.10. I think the high was 11. Let me just check. Put my mouse there. The high was 12. So respected that weekly level, which is what you would expect it to do the first time it visits there. But we've got a zone of resistance, 56.10 to 57.08 is another weekly level. If we don't trade at 157.09, significantly the monthly level is going to drop. So the end of the month, if we don't trade at 157.09, is going to create a major barrier. So definitely watching that. You can see the low of the year was an example of that monthly line working, and these were bull whips, pops and time continuation buys for the low of the year. Quick look at Europe. Bunds sort of stopped at a raft of daily levels and not really doing very much. We've got that weekly level a little bit higher up, 65.17. Gold. Talked last week and during the week on the channel how important 1305 to the monthly level at 1307.2 was, and the high of the week I think was just a couple of ticks short of that monthly level, 1306.9. So that is still your reference above this week. The weekly level is 1262. So start moving below that. That would open up space back down to 1209 or so. Also sometimes get things about timing, about markets all hitting levels at similar points in time, and gold, crude, respected this monthly level at 46.79. The low was just 15 ticks below it in the end. We had a buy signal on Friday, so there's an expansion of range there. Got to watch out for 50.57 above, and of course this monthly level at 46.79, and also a weekly level that it sort of meandered around at 47.64. In a bullish scenario, if we do pull back and that holds, then that would set up an attack of this level above. Start trading above there, and the weekly bullish level on the range relativity, you can see that there's a lot of space. So plenty of room for it to rally if it can start holding above there later on in the week. Next on to currencies, dollar index. Once again, these monthly levels just keep on coming back. It respected that monthly support earlier on in the month, but we're trapped. 94.13 or 94.11. That's also a short-term level as well. Start closing above that, and the range relativity level, again, that opens up space for it to rally. The support is strong because a weekly resistance here moved to the bottom and support, so that's reinforced that monthly level, which is subsequently more powerful. If we do the euro dollar, in contrast, nothing's moved to the top, so no lines have moved above. We have had some negatives, but we've got this big support point, 116.17. So you're going to have to connect to the dollar index level and get some confirmation from the euro dollar with it breaking down before we can truly get bullish on the dollar index, as it were. That would obviously have connotations for gold as well. If we do the pound, pretty quiet week really. Had one down day I think on Tuesday. Not really a great deal happening there. If we we do the Aussie, that stopped ahead of the monthly level, 77.79. I think it was about 15 ticks above it. That is your downside reference. We did get a time continuation buy on Wednesday, and it hasn't really done much yet. If we do the Kiwi, that respected the black line weekly level. We got a buy, very similar chart last week to what the Aussie did. Dollar CAD, which had been a long position, that was then the profits were taken on it. We had a sweeping reversal beginning of last week, if my memory serves me correctly. Sorry, it was Wednesday. So again, we respected that monthly level. Also on the futures, it held it perfectly, which is the other way around. We had the steps process ending, so that means that this rally had run out of steam. Time continuation sell, book the profits from the longs down here. That is still a very important level though, so 124.60, another 140 down. Moving on to some of the stock positions, SPPI. This is really a fundamental based trade as much as technical, because we're a hostage to whatever various results come out of a multitude of phase 2 and phase 3 tests that are going on, which is why the main position is in options, February calls, so that if there is some bad news, the hit is limited. There is no real resistance though, and as spoken in previous weeks, the time area studies confirmed that this was very much a bullish breakout. In terms of sector rotation and ETFs, etc., home builders been on our radar screen for a long time. It's number 3 sector, so in the loved space, and it's been there for quite a while. It's failed at this monthly resistance on 2 separate occasions, so up here and then again more recently. We then got a divergence based sell signal which said yes, let's pull the trigger. This bullwhip signal, because we're in very tight sideways, is not as powerful as if we were already in a trend, and obviously has not occurred at a support point, as it were. So if you contrast it to this one over here, which was a bear cage, it was at weekly resistance, did cause a move back down again, which didn't really last very long. This bear cage was a bit more interesting at the time, but we hadn't finished that loved process, so it was a warning at that point. We needed to see some results of some of the home builders, which we got in earnings season, and as a general rule, it fulfilled the criteria of a crowded trade, in that we got good news on their results and bad price action. Yeah. So we have a short position there. It's pretty poor on Friday actually, considering what the market did. This is the leader, so DHI, and 34.56 is a pretty critical support. Didn't get any buy signals in contrast to the ETF, but we did get a sell on Thursday. So, but we're in the ETF. It was just a little bit easier to get involved on that one. Some of the other sectors that have previously been loved, so semiconductors, just have a quick look there. This was where we had a slam dunk with UFOs and time continuations. Tries to rally again, and then another set of sells on Thursday. This weekly level, if we take out 142.78, we'll go back down here. The thing I'm really interested in is the fact that the monthly level is going to move to the top, and that will be the final piece in the jigsaw. So very interested in that one at the end of the month. If I do XSD, which is another one, again, a monthly level is going to move to the top. We've had a time continuation sell, looking at that 57.56. Okay, so that's it. I think those bond levels above are very important. Stocks do remain under pressure on those indexes, so watch that E-mini level. And on the dollar, we need that confirmation of any breakout by looking at the euro dollar as well. Okay, thank you.